Today we're going to be talking about 3 different student loan forgiveness programs and how one of them is the biggest scam. And before we begin, I'm referring specifically to federal or Stafford student loans. First up, the Teacher Student Loan Forgiveness Program. Like every forgiveness program, you have to meet certain qualifications. This one, you specifically have to be a teacher. But not just any teacher, you have to be a highly qualified teacher, which means you must have attained at least a bachelor's degree, received full state certification as a teacher, and not had that certification or licensure revoked or waived based upon an emergency, temporary, or provisional basis. You also need to have taught for at least 5 complete consecutive academic years, and at least have one of those years be after the 1997-98 school year. You must have been employed at an elementary school, secondary school, or an educational service that serves low-income students. I've included a link below with the approved schools. After meeting these and a few other requirements, the maximum forgiveness amount is either $17,500 or $5,000, depending on the subject that's taught. Thanks! Really? Number 2, the Public Service Loan Forgiveness Program. Now this one's a little fishy, and I'm not necessarily saying that it's a scam, but an article came out recently towards the end of September of 2018 that stated that 99% of those who applied for forgiveness under this program were rejected. Roughly 29,000 applications have been processed so far, and out of all of those, only 96 of them have been approved. Most of these were denied because they didn't meet the requirements, which are working for an approved employer, working full-time for that employer, having the correct type of loans on an income-driven repayment plan, and then making 120 qualifying payments. All these points have subsections, and so if you plan on going this route, I highly encourage you to look into it as much as possible because there's a lot of nuances that go into it. So if you go over to the student loan website, it kind of spells it all out there for you. Now the Public Service Loan Forgiveness Program is still relatively new, and so reports indicate that they're going to see more individuals qualify over time. Number 3, the last one, the Income-Driven Repayment Plan. Now this is the biggest scam, and technically it's not even a forgiveness program, but your loans can be forgiven. And the more I read into it, the more I realized that it's not necessarily a scam either, but I was very misinformed. And I feel like most of the people that I've talked to didn't know a whole lot about this repayment plan either, even though they were on it. Now you're on this plan if you have one of these repayment plans. I'm currently on the pay-as-you-earn repayment plan because before I graduated from chiropractic school, I realized that under the standard 10-year repayment plan that I was going to be paying back $1,800 a month, which was $1,800 that I didn't have. That's when it was suggested I look into the income-driven repayment plan, and I had no idea what that was. And so essentially what I was told is that all you have to do is make qualifying payments for the next 20 to 25 years, and they'll end up forgiving what the balance is left over. So I was a little skeptical of it, so I looked into it. And there it was, right down at the bottom there, it said that your student loans would be forgiven. So of course, I signed up. Then during my annual renewal, I saw it. Unlike the Teacher Student and the Public Service Student Loan Forgiveness Program, the loans that are forgiven under the Income-Driven Repayment Plan are considered taxable income. I don't know about you, but when I heard the words forgiveness, I thought, no strings attached, we're done, you've been pardoned, forgive and forget. Well, the Department of Education may forget about your loans, but the IRS won't. So let's use an example here. If you go to Student Loan Hero, they've got lots of calculators that essentially it'll calculate every plan that you're potentially on and compare it to the original 10-year standard plan. Now again, I'm on the pay-as-you-earn repayment plan, so that's the calculator I'm going to be using. I'm going to input the median income of my profession, which is $68,640. And then I've got a family size of 4, and then I reside within the continental United States. And let's just assume that my income actually doesn't grow. It stays the exact same for the next 20 years. So we'll put 0 in there. And then my current loans are around $163,000. So I'll put that in. And then my average interest rate is about 5.7%. Now when we scroll up to the top here, we'll see that I'll end up paying $44,524 based upon the information that I've inputted there. However, there'll be $304,127 that's forgiven. Now this is considered taxable income, the $304,127. So if we go in and we put it into a calculator, the $304,127 plus, we're assuming that my income hasn't changed, so it's going to be $68,640. That's a total of $372,767. So that's the amount I'm going to be taxed that year. And now we can take it into a tax calculator. So we run over here and we'll throw that into the taxes here. And I'm currently living in Dallas. Boom, there it is. A total of $89,455 is the amount I'll be taxed. Okay, so now let's take the amount I'll be paying in taxes plus the amount that I end up paying under the pay-as-you-earn repayment plan. And when you add those together, you end up getting $133,979. And then if you compare that to the 10-year standard repayment plan, which actually turns out to be $214,200. So there's a pretty big difference there. When you look at this example and you take into consideration how much I'd end up paying over the life of the loan and end up paying in taxes, I'd actually be paying a considerable amount less under the income-driven repayment plan than the standard 10-year repayment plan. However, you have to take this with a grain of salt because there's a lot of variables that I didn't factor into this, and there's a lot of things that can also occur. The biggest one is that 20 years from now, it's more than likely that our tax brackets won't be the same as it is, the 2018, 2019. Basically, if you're on an income-driven repayment plan, you need to know what's coming. The worst case scenario would be 20, 25 years from now, you end up getting a letter in the mail from the IRS stating that you owe a whole bunch of money that you didn't even know that you were going to end up having to pay out. Thanks for watching, guys. I'd love to hear from you. If either yourself or someone else you know has had their student loans forgiven, please leave a comment down below of which program they're on and kind of any details that go along with that. That way I can look into it. If you've learned something from the video, please give it a like, share it, and subscribe to the channel. I have more videos on the way.